Thanks a lot, Ekta, for that. So Gland Pharma is actually recovering a tad bit from the lows, so keep an eye out on that. But the other, pocket that's done very well last year is PSU banks, and Canara Bank posted a very good set of Q3 earnings. It's been 3 quarters in a row that corporate loan growth has been very strong. Margins at a 29-quarter high, which has aided the strong ROE. The asset quality has also improved. Satyanarayana Raju, who's the Executive Director at Canara Bank, joins us now to talk about that. Mr. Raju, thanks a lot for joining in. I think we spoke with you the last time. You had mentioned that there is a big pickup in corporate loan growth. But can you give us some numbers, both in the agri portfolio and the corporate portfolio? What are you looking at as a sustainable growth rate in FY24? And what would this mean for your overall loan growth as well?
We have given earlier the guidance for the current financial year in the percentage of RAM will be maintained at 55 and the corporate credit will be maintained at 45. 1 or 2% here and there, but the otherwise general guidance is this 55 and 45. Even now in the third quarter we are able to maintain that. That shows that it's not that only the corporate credit is growing steeply. There is a good growth in the RAM credit also. We have given a RAM credit of 13.81% YoY as on the third quarter. Our domestic corporate credit also has grown at 14.5%. So okay, we are continuing that what we have given the guidance, and we are confident that we can look at the same growth in the
Sir, but can you give us some numbers for the loan growth? Overall loan growth would be what for FY23? And also, I mean, this year fiscal is almost over. So for FY24, what kind of loan growth do you see?
Actually, we have started our journey around 7.8, madam. 7.8 lakh crores. That was the total advances. So there, that's actually our 4 point as on date. It is a 4.63 is the RAM. The remaining is corporate. Corporate is including the overseas numbers also, like a 3.88 lakh crore. These two together, actually we have grown overall. It is approximately as on date. We are aiming for 7.8 to now 8.5 means almost 75,000 crores we have grown in this. So that for the 9 months, what I am telling is about the 9 months. The last quarter also we have grown considerably well in that we have started from 824 to 850. That's a 26,000 crores we have grown.
Sir, we appreciate you. Sir, we appreciate you. You're giving us the absolute number of your loan book. But all we want to ask you is, from this base of around 8.5 that you're talking about, what will the loan growth be, say in FY24? What is the number you're looking at? Percentage terms. Does it grow by 10%, 15%, 8%? What could the growth number be? And also, NIMs have been absolutely stellar in the past quarter. But what is the sustainable number that we're looking at? Go ahead, sir.
The current quarter also it will be around 14%, sir. For the next financial year, we look at that the credit growth will continue at 14 to 15%. The reason behind that is our CD ratio is now, we have traveled for the last 2 years from 68% to now 73%. Still there is a scope for that CD ratio to grow. We are aiming at to grow at 75%. 1 or 2% here and there. With that, with the 14 to 15% growth, we are looking at that's the growth in the next financial year. Regarding the margins also, we have given the guidance for the margin for the current financial year is actually the 2.90. But now, as on date for the 9 months, it is 2.93, and we are last third quarter we have reached more than 3%. We are confident that our margins will maintain in and around of 3%, sir, in the next financial year also.
So NIMs around 3% in FY24, right? We can take that?
Yes, sir.
Okay, all right. Now, got that. Now, we spoke to you on the 28th of December last, and at that point, you'd said that you'd increase deposit rates, you told us that you got huge amount of deposits, some lakh crores in a couple of weeks, in 3 weeks or so, from what I remember. At some point the portfolio will start to rebalance, right? So just trying to understand whether what kind of impact this will have on margins. Are you saying, well, all of this is entire, you can pass this on the asset side, there is no impact?
No, actually, we have started increasing the rate of interest on term deposits on October 6th. So that's we introduced a special scheme, keeping in the mind that whatever the benefits we are getting the Canara Bank, that we want to share it with our one of the important stakeholder, that is the depositors. That's the purpose. Actually, first we offer the higher rate of interest. It's not that we have some liquidity issue. That's why we offer the higher rate. First, let me clarify that. The second one is when we are introduced that scheme, we got a very good response on that, and we have, as we confirmed that we have got in and around of 1 lakh crore in that scheme for the last 3 months. But now that scheme has been withdrawn, and we have introduced one more scheme of 400 days in the recently 1 week back, and that is for the aiming for the our bucket where we need the funds. But what we want to say that is generally in the banks, public sector bank or any bank, the term deposits generally they deposit for the 1 year period. When it is a 1 year period is over, either it can be renewed or it can be replaced with the new deposits. That's actually the style of functioning in the public sector bank. Generally, if you look at the ALM, in what we say that the 1 lakh crore is also is an including of what the people who have invested, who instead of withdrawing it, they might have reinvested that money in this scheme, and the portfolio is now it's only in 90,000 to 1 lakh crore against a total deposit of 11.80 lakh crores. So the percentage of that composition is that can be well within under control. I don't think that it will influence too much on our margins for the next financial year.
Okay. I have to ask you just a couple of questions on what's happening with the international business, because over there the momentum is quite robust. Are you lending to any Indian entities with foreign operations? And can you just give us a little more clarity on what's happening there?
Yes, madam. One is you are looking at the percentage, but actually the base is very small for us. So that's why that the growth, whatever it is showing is, it is reflecting a percentage-wise is a higher growth. We are funding both in the, actually the recently last 1 quarter, we have funded some amount, good amount to a AAA rated Indian oil companies too. So it is a composition. Both we are lending at a foreign, that particular location banks, public sector, they are the AAA rated banks, as well as in Indian corporates which are rated highest rating of AAA and AA. So it's a composition, madam. But absolute numbers, if you look at, the growth is well within that expected level.
Okay, all right. So I just want to confirm, you have given us the NIMS outlook, the loan growth outlook. Credit cost, you were looking at around 1.2%, right?
Yes, sir. The current financial year, we are given a credit cost, is guidance is 1.4. Now we could reach 1.2, and we are giving a guidance at 1.2, 1.25 for the next financial year.
Got it. All right. So I just want to focus a little bit about your gold loan book. Now that's been growing very, very well. More than 1 lakh crore is what it's reached. It's roughly around 13% of your book. I wanted to ask you, about the difference. As of now, you have your retail gold portfolio, which is a very small part, while bulk of it is the agri gold loan book. What is the yield difference on both these two? Because if I'm looking at it, the retail gold is still a very small portion of the entire loan, gold loan book. Go ahead.
Even from the bank point of view, because our 60% of network is in the rural and semi-urban, sir. So that is the strength what we have to tap this gold loan. People will come to the gold loan only on the emergencies. How fast you can react to their requirements, it depends on that. Now we are established very much in the country. We can confidently say that we are the leaders in this particular sector because of our TAT in this particular portfolio. Regarding the composition of the retail credit as well as the agricultural credit, there is a gap of price maybe around 1%, but we are also focusing more on agriculture gold loan only, because it will be indirectly again helping to us in the form of PSLC selling in the market. That is the compensating yield, whatever we are giving the concession to the borrower. Yield, I told you, no, sir. Retail and the agriculture, it will be the 1% gap is there. That's actually 1%. The pricing, ultimate borrower.
Just one last thing I want to confirm. You said that the Canfin Homes will have a new MD, by the end of this financial year. Is it on track, sir?
Yes, sir. Already the process is completed, and only for the joining is there. I am confident that he will take the charge before conclusion of this financial year.
We'll hear an announcement soon to the exchanges?
Once that he is reporting that, then we will give that to the SEBI, sir. On the day of that taking the charge, we will give it to the SEBI.
Okay, and that should happen before the end of this financial year. Thank you very much. Appreciate you joining in, and good speaking with you here on CNBC-TV18 as always. Great set of numbers from Canara Bank, and basically guiding for more improvement across a range of matrices. We'll take a break here. We are back with the management of Jindal Stainless Steel to discuss their third quarter numbers. Later, we have the management of Tata Communications joining in for a discussion on the third quarter results and outlook going forward. Stay with us.